What's going on, everybody? We're finally back. I've been doing too many random assorted projects around the new house, but we're back on the YouTube fucking the grind, as they say. Political news, I don't know. I gotta catch up. Honest to God, I haven't really been paying any attention. I've been building a fucking gravel patio behind my house, so I haven't been paying that much attention. Economic news, I have been paying attention, and things are getting interesting. If you have been paying attention, you would have seen they did the Jackson Hole meeting, whatever. The Fed is alluding to the fact that they are going to cut rates here very soon, September. The chances of a September rate cut have moved up into the high 80s, low 90s. They're predicting a rate cut. Stock market reacting accordingly. Gold prices reacting accordingly, crypto, all the stuff reacting accordingly, all the assets going up in value. We are dealing with a weird situation where basically anybody that I listen to on economics, whether it be YouTube, news, just any article, mainstream, whatever it is basically ringing the alarm bell that if they cut rates, which the federal government's calling for, a lot of people are calling for it, whether they're interested mostly in the stock market or the national debt. Federal government's calling for it because our interest expenses are just too high with the rates staying high like that. So the Trump admin's calling for rate cuts now. They want better jobs numbers. That's how you get it. You cut rates, make money easier to get. People start borrowing money again. Drop the amount of interest the United States pays and spur the economy with easy money again is what they're calling for. Stock market, same thing. More money gets injected, stocks go up. That's how it works. Dollar goes down, assets go up. Generally, oversimplification, I know, but that's how it is. And like I said, we got people ringing the alarm bell, and I'm kind of on these people's side generally. This is my summary, but also a general take, is that when we cut the rates coming in September, depending on how fast they cut them, that can all depend. The Fed is becoming more appeal. I don't know. They're appealing to the fact of cutting rates because the job market is starting to falter a little bit. As the job market weakens, they'll be more interested in cutting the rates to try to spur the job market as well. Same thing with stocks. Give the companies access to easier money. They'll hire more people. They'll grow and expand instead of cutting back and being worried about the economic outlook. Problem that comes with this is inflation. Fed's dual mandate, employment and inflation, keeping their 2% inflation target. We never hit their 2% inflation target. We're still sitting around high 2s into the 3s is what they report. What's more likely, it's probably higher than that in reality. So we're never going to hit 2. They're looking at what's called FATE, flexible average target, and saying, hey, we can average out to 2% over the long run, maybe if we do these certain things this way or that way. So they're trying to kind of finagle their way out of this situation as they watched the economic outlook of the United States kind of dwindle and kind of fall apart here with the labor market. Now, when I say fall apart, I mean that's a little bit, that's too far. That's an exaggeration, I would say. But as we see the weakness, the cracks showing, they're looking for ways to remedy it. They're trying to be proactive, but their proactiveness, and along with the push from the Trump admin to cut the rates, could very well just lead us into another giant inflationary problem. That's personally where I think we're going to go. Will it go back to 10%? I don't know. But we might see 5-6% inflation again for 2-3 years in a row. And you know how everybody's struggling and can't afford anything, and everybody's putting shit on their credit cards because the prices are so high, and you can't afford a house because the home prices are so high and the interest rates are high, and you can't afford a car because the interest rates are so high and the car prices have fucking 1.5 or 2x in the last 10 years. Well, get ready for it to get worse. And if they cut rates just a little bit, what are we even sitting at now? I don't know, 3.5-4% right now. If they cut rates back, if they even cut half a percent to 100 basis points, so 1%, they take 1% off, and inflation goes back up, but also the home price starts accelerating again. We kind of hit, maybe not deflationary home prices right now, but we're hitting at least close to stagnation, and in some places, I made a video about this before I took a nice solid break. home prices were starting to decrease depending on where you're at, southern states in the United States, and stagnate in other places. But if you cut rates, where's the home price going to go? Is it guaranteed that it's going to go up? No, because honestly, we still are probably going to be in a very, very similar situation, just depending on how fast and how much they cut rates by, that we're still in nobody can afford the house. If it goes up to $500,000 from $450,000, it doesn't matter. Nobody can buy the house. I don't care if the interest rate went down 1.5%. Your mortgage is still $2-3 grand. You just can't afford it. My mortgage right now on a $210,000 house with a 6.75% interest rate is like $1,230 with no taxes and no insurance included. That's just principal and interest, just the house itself. So if you're talking a $400,000 house, principal and interest, what are we looking at? At least $2,500 easy, depending on what kind of interest rate you get. And if your interest rate's worse than that, it's going to be even worse. Throw taxes and insurance in there, talking $3 grand, easy on the house payment. And if the average house is that, it doesn't matter if the rate goes down to 5.5%. It saves you a decent chunk, couple $100, but it's not enough to make people be able to afford it. And that's the consensus. That's my general outlook. I want to know what you guys think. I'm going to get back to posting regular videos because, like I said, I think things are going to get interesting economically, and we'll see what's going on politically. I'll have to check it out, but I think we're kind of hitting like a year-ish in. We're going to get into like a year-ish into a new presidency. Things will start slowing down. It'll kind of stagnate, but I'll keep up with it one way or the other, especially because I'm taking a timeout on the house projects. That's enough for a little bit. I'm getting a little fucking tired already. So no more gravel fucking driveways and patios and flower beds for me for a minute. So we'll get back into the YouTube, and I want to know what you guys think. Do you think the inflation's likely? They start cutting rates. What do you think's going to happen? We going back to 5 to 10% inflation on top of the 20% inflation we've had in the last 4 or 5 years? Because I think in reality it's probably more like 40%, maybe 50%, depending on what you're looking at. And I don't know how long we're going to survive off another. If we jack it back up to 5, 6, 7% inflation year over year, I don't think we're going to last. So let me know what you guys think. Leave a like on the video if you got some out of it. Dislike it if you didn't. And I'll actually catch you guys tomorrow.